when the interest rate goes down in 2023.
But first, let's hit it. Hi, this is Alan Victoria. Welcome to our channel and podcast.
And if this is your first time in our podcast and YouTube channel, make sure you subscribe and get notified.
Honestly, I get call text all the time at 252-327-3357, so I can't wait to talk to you. Okay, let's talk about those interest rates going down. And of course, the interest rates are the highest they've been in 5 years, right?
Yes.
And the main factor is the Fed is trying to, of course, balance that inflation, and they're trying to reduce inflation, which is what all of these interest rates increasing is going.
And besides stopping the housing market, apparently.
Right. So how high will the inflation go?
Yes. Basically, the main driver, as my wife said, is inflation. And basically, what we had the past 4 decades high in June actually was the highest one, 9.1%. However, at the time of this video in November and December is 8.4%, which is unprecedented the past 4 decades. No?
Right. So don't forget, inflation is a mix of supply and demand, but it is
Yes.
not always interconnected. There's a lot going on there that's behind the scenes. But basically, the interest rates can cause a recession.
Yes, and also depends on the response from the government.
Right.
No?
So there's things out of our control that, it's hard to predict. Are they going to do things right? They're going to do it wrong. I don't know. So what is projected in the next 5 years?
Yes, the analysts actually mostly focus on the short terms, no?
Mm-hmm.
And the long-term interest rate forecast is stretching to basically the next year, which is 2023, and also the 10 meeting that comes from the Federal Reserve Committee or FOMC.
Right. So basically what they're saying in a nutshell is they don't really know all of this effort of 2022, how it's going to affect the long term. This is unprecedented numbers, growth so fast.
Yes.
So there is really no answer to how it's going to fix the future, which is, crazy. So, but we do know this Congressional Budget Office is expected with the Fed to stick to what it's trying to do, which is cut the inflation because it's hit so fast.
Yes.
They're trying to really take those interests out of the inflation. And so really 2022 was the year of inflation remained sticky, and we have supply issues, demand issues, and everything. Labor issues, everything.
Actually, this CBO or Congressional Budget Office that my wife mentioned, they had basically a projection for 2023 and 2024. What is the projection is?
They expected it to rise by what they're expecting the Federal Reserve to go to the 2.6 and keep interest rates at 2.6, which will keep our mortgage at like the 5 because there is a projected of thing. But anyway, according to interest rate predictions from the algorithm based on computers and science beyond me, the Fed is projected to go between 14 to 14.88 in 2025 at this rate.
In January 2025.
Crazy, huh? So the computers are saying one thing, we're telling you another, and it's just who has an answer?
Yes. Therefore, And
computers can be wrong. Computers can be very wrong. Just like we can. I have no problem telling you I was wrong about everything.
Therefore, basically the message is you need to always conduct your own due diligence.
Absolutely.
And never invest in the trade or the money that you cannot afford based off what we're saying according to projection of the algorithm.
And let's be honest really quickly. You say you want something and you have all the power in the world to make whatever it is, your hopes, your dreams, your desires happen.
Yes.
So it is up to you 100%, not these computer programs, not me, not somebody with a crystal ball. Nobody knows the future, to be honest. You know what you want and what you can make happen, and that is all that really matters at the end of the day. And if you want a house, well, let's get you a house.
I hope this podcast and video was useful. Don't forget to subscribe and see you in the next video.